The World Bank's recent approval of a $700 million loan to bolster Ethiopia's financial sector comes amid a backdrop of severe economic hardship for the nation's populace. While the infusion aims to stabilize key financial institutions, including the Commercial Bank of Ethiopia and the Development Bank of Ethiopia, the tangible benefits for ordinary citizens remain uncertain. Ethiopia's economic reforms, designed to liberalize the market and attract foreign investment, have precipitated a significant rise in the cost of living. Inflation rates have soared, with the International Monetary Fund projecting a 23.9% increase in consumer prices for 2024. This surge has rendered basic necessities increasingly unaffordable for many Ethiopians. The government's recent decision to float the Ethiopian birr, transitioning to a market-determined exchange rate, has led to a substantial depreciation of the currency. In August 2024, the birr was quoted at approximately 75 to the US dollar, indicating a 24% devaluation from the previous rate. This devaluation has exacerbated inflationary pressures, further diminishing the purchasing power of consumers. Public sector employees, who constitute a significant portion of the workforce, are particularly affected. With stagnant wages failing to keep pace with rising prices, many are compelled to make difficult choices between essential expenses such as housing, food, and transportation. The increased cost of utilities following a 122% hike in electricity tariffs by the Ethiopian electric utility in September 2024 has added to their financial strain. The government's efforts to address fiscal challenges through increased taxation and service fees have further burdened citizens. Revisions to tax laws, including adjustments to property tax rates and the introduction of new levies, coupled with higher fees for services such as passport issuance and vehicle licensing, have intensified the economic strain on households. While the $700 million World Bank loan is intended to strengthen Ethiopia's financial institutions and promote economic stability, its impact on alleviating the immediate hardships faced by the population is questionable. Without targeted measures to address the cost of living crisis, there is a risk that the benefits of such financial interventions may not reach those most in need. Critics warn that the government's approach will deepen inequality and entrench the suffering of ordinary Ethiopians rather than provide relief. As the government pushes ahead with its reforms, it continues to ignore the voices of its citizens. While policymakers claim to be building a resilient economy, the reality for most Ethiopians is a daily battle for survival.